What's up, everyone? It's May 23rd, 2025. Had a small pullback trend, kind of. Um, it's a pretty interesting day because there was a big gap down, and right around this bar here, we were talking in the Discord how this could be a bear flag. So multiple pushes up and then sells off, but ended up just being a small pullback trend until the end of the day. So it's not an all-day small pullback trend to around maybe 11:15 Pacific Standard Time. We went sideways to down. I think so. What fuels trends is trap traders, and with this big of a gap down, I think traders were trying to get short. The market was not selling off, so they were buying back shorts, and bulls were buying the dip. And that constant tension between trap traders and bulls wanting to chase the market is what creates trends. I do think today was hard. I think the gap down was able to throw people off. I didn't trade today. I traded the overnight session and took a little bit of a hit. So I was like, you know what? It's a 3-day weekend. I'm gonna relax. I've actually been working on uh, systems with ChatGPT. It's really fun. It's cool. But yeah, let's get into the breakdown. I'm gonna give a quick shout out to all the members and subscribers. I love it. I love talking to you guys. Thank you for always joining the channel and asking me questions. I'll show you guys the one bar breakout strategy I've been working on. It still revolves around second legs, but it's just in the testing phase. But just to give you guys a heads up of what I'm working on in the background. Still stay tuned for the breakout videos for the members dropping Saturday, Sunday-ish. This new strategy I'm working on has consumed most of my time today. So yeah, stay tuned for that. Okay, so we got the weekly chart here and the daily chart here. Wait a minute. Did this not update? Oh no, this is the weekly chart. That's funny. That's funny. I'm used to seeing another bar. So yeah, this is the weekly chart. It closed on its low. Has a tail right above the EMA. So bulls were buying the EMA, but still more bear body, which means there were sellers. There were sellers within this bar selling. Doesn't close on its low, so that's good for the bulls, but it's not the best looking situation. Maybe a bar like this bar here. So that would mean the bears sell off and then the bulls rally and close around its high. Would be better for looking like a continuation if you wanted to see a one pullback two. Probabilities for deep pullbacks go up within trading within third legs. Leg one, pullback leg two, pullback leg three. Look at the pullback depth here. It's about 50% of this first leg. Let's say that this is one leg and the pullback depth stayed above the 50%. But now look at the pullback depth for the third leg. It actually went deeper. So that's already giving you a hint that we could be entering. Well, we are in a trading range because we've had a big down and a big up. But on a more zoomed in level, I think the market could be going more sideways now. Weekly chart, daily chart. Daily chart, we can see these three legs nicely. Let's say leg one, pullback leg two, pullback leg three. So that's going to be a leg one, pullback. Here's that trend line break. Leg one, pullback leg two, pullback leg three. And in the third leg, this pullback has actually tested the breakout point. Well, actually, let's see. Okay, so it has not tested the breakout point. It's coming close. Bears definitely want to test this low here and then close the gap, and then they want to get down to this pullback, that pullback, and so on. That's how targets are made. When we're rallying, the bear targets are being made. So this is a bear target, that's a bear target, this is bear target, bear target. When we're selling off, bull targets are being made, and that's the pullbacks here, 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 here. And that's because that's where trap bulls are. So again, I do all these breakdowns in the form of leg count, market cycle, and breakouts. The market cycle is breakout, channel phase, trading range. And it's important to know where you are because if you can spot where you are within the market cycle, you can place a trade around that. I am more a systematic trader, so sometimes I miss certain phases of the market cycle, but this new system I'm working on is I'd miss like these 4 bars because there's no deep pullback, but then I'd be entered in almost all of these bars here. So for me, I'm giving up the breakout phase, and breakouts are very momentarily, I don't know. Like here's a breakout 45 to 46, 48. So I'm going to miss that, but then I can get the pullback here, I can get all these pullbacks. So prior to this, I was missing the trading range phase, which is 80% of the time. So I wanted to kind of flip that around, and breakouts are brief. And how do I say this? Every bar is breaking out of the prior bar's range. So bar 29 is breaking out of bar 28. And then there's that pullback that I'd be looking for with bar 31. Take the 1R, put it on the pullback, and that's met pretty quick. That's pretty much the system I'm working on. The stats for the system are really nice. I've been working on them a lot, and this is the best I've got so far. The reason I'm pointing this out to you guys is because look at the comparison between the total P. This is all back tested. This isn't live. Look at the P&L difference. It's 1900 to 800. So the max drawdown I have would not even be half of the P&L. That is a very tolerable thing. My next goal this weekend is going to be to get this to about 53 to 60%. But I'll have to give up some P&L if I want that, because it is what it is. 50% is good. I am going for a little bit more than 1R in this trade. No, I'm going for a little bit less than 1R. Hold on. Let me think. The stop is going below the breakout bar. I'm going past. So I'm going for a little bit more than 1R, which is different from my prior systems. It's all been 1R. And that difference is being shown right around here. A 1R system is a scalping system. A 2R system is generally a swing trading system. And for a 2R system, you're going to want to have above a 40. For a 2R system, you can get away with a 40% win rate because you're winning more than you're losing. For a 1-to-1 system, you're going to want to trade around a 60% win rate because you need to win more than you lose. So that's the difference between a scalping system versus a swing system. I like scalping systems because they're high frequency. I don't have to be glued to the charts. I can pop the chart up, wait for a signal print, take it. This is a little bit in between. I'm going for just a little bit more than 1R of my stop. So it'll be interesting to see how that plays out, which I'll be deploying within Tuesday, Wednesday, Thursday. Probably Wednesday because Monday we're off. Tuesday I'm a little bit busy, so probably around Wednesday. Pretty excited to do that. I'll be tracking that live through TradeZilla and giving you guys updates. Anyways, this can be a quick review. So I've already been rambling, but it's important for you guys to understand what angles I'm coming from because you're watching these reviews. Big gap down, bar 1, bull bar closing on its high. Bad follow through for the bulls with bar 2. It rallies and sells off, closing bearish. That gives the appearance that bar 1 could be its first pullback. However, we see bar 3, no body, trading range behavior, has a tail. It has tails on both ends. Then we see bar 4, a tail on its low. It could be a deep pullback for the bulls, with this being the first, with the low of 1 and the high of 2 being a trend. So the trend's right here. Then they get a deep pullback testing the low. Remember what I said about trading range behaviors? We get deep pullbacks, and that rallies for, well, it rallies all day, but just temporarily. It rallies from here. It rallies from the low of 4 to the high of 9, being 3 legs. Leg 1, pullback, leg 2, pullback, leg 3. Then we go more sideways. Lots of overlap. With the big gap down, I think it makes today challenging. Bar 10, bear bar. I just skipped all this, excuse me. Bar 4, rallies breaking the high here. That's good for the bulls, but it has a bad close again. Small bull body, big rally. Bulls are buying this, bears are getting trapped. Bar 6, inside bar. Now we somewhat have a flag, pull, and a flag. Breakout mode. True breakout mode is a reversal above bar 1 and a reversal below bar 1. In this case, we got the reversal above and we got a reversal down here. It wasn't below. But still, it's a triangle, so it's breakout mode. 5 pushes. Push 1, push 2, push 3, push 4. I missed one. Push 1, push 2, push... What is going on? Push 1, push 2, push... Oh, okay, so this... Push 1, push 2, push 3, push 4, push 5-ish. Triangles have 5 pushes, so that was a little funky. Bar 8, bull bar closing on its high, bad follow through. Excuse me, bar 7, bull bar closing on its high, bad follow through bar 8. But it's a strong bull bar, and it creates a gap here. That means bears are now trapped, and bears are trapped after a big gap down, so that's odd behavior. With this type of gap down, you wouldn't expect bears to get trapped. Bar 9, again, another bull bar, closing just above its midpoint, but it has more tail. Bar 10, bear bar closing on its low. Bar 10 is trying to break out, but what's it breaking out of? It's actually breaking out of nothing. It's a big bar, it's a trend bar, but it's also an inside bar. Then we see bar 11, sells off and rallies, trapping bears that shorted here. And then just like the bears are trapped, bulls are now trapped. The tail on bar 12 rallies and then sells off. Trading range behavior, both sides are getting trapped, both sides are willing to average in. Bulls will buy lower, bears will short higher. Where are we? 14. Small bear bar has a tail, so bulls bought the pullback on 13. Bar 15, there's a lot of overlap today, guys. Bar 15 has more tail, bull body. Bar 16, more tail. Now we have 3 pushes up, and this is right around where we were talking in the Discord where we thought it would be a bear flag that sells off. So what happened for the bull side, we actually thought it happened for the bear side. I didn't trade today, and I think most people did good in the Discord. That was just a thought we had when we saw 17, 16, 17, 18. There is a gap there. The 17 body creates a gap, so that's good. Because now we know bulls are trapped. Again, gaps are happening around support and resistance. So look where this gap happened around the swing high here. Look where this gap happened around the swing low here. So bulls are trying to buy the low. They're trapped. They're going to buy more lower trading range behavior. Bar 19, rallies, sells off, closes right around the midpoint. Not the best, but it does break the high of 18. So there's a trend line break and a hidden leg 2. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. Leg 3 and leg 4 are weak and just become higher lows. That's bullish price structure. Bar 22, bull body with a tail. Lots of overlap again. This is all just one big trading range. I'm sure like on a 45 minute chart, this would be a doji-ish. Okay, so smaller time frame. Let's go to 40 minutes. Yeah, there's the doji's not the best. I bet 20 minutes. You see all the time frames are having a lot of overlap, so keep that in mind. It's really not trending behavior. It did end up being a small pullback trend, but as the bars are printing, it's a tough trade. It's a tough day. It's a 3-day weekend, so maybe, people are taking off early. Low volume. Bar 23, bull bar closing on its high with a pullback on 24. There we go. That's a little bit better. Pullback right here, testing the high of the gap, and then it rallies. We now have 1, 2, 3, 4, 5 bars in a row. Complex legs, leg 1, pullback, leg 2, pullback, leg 3. Very complex, lots of overlap, not strong. You can see a deep pullback. 26, rallies, sells off. 27, inside bar. 28, not a traditional inside bar because it sells off, but the bodies are all pretty even. There's some sort of resistance going on here because when bulls tried to rally, it failed. The bears get 2 legs down. They get 3 legs down. Fractal legs. Leg 1, pullback. Leg 2, pullback. Leg 3. Or you could count leg 1, pullback. Leg 2. I would not ignore the pullback on bar 31 because in trading ranges, second leg traps are common. And this trend line break right here is forming a second leg trap. Leg 1, pullback. 2. Bears got filled on bar 32, and then it rallies, trapping them. There's tails up here, so there is time for them to short down here, and get out 50%. Again, I've said this like 3 or 4 times in every video because I think it's very important for people to understand. Trap traders, when they close their position, they're doing the opposite. So bears getting trapped here have to buy back shorts, causing bull pressure. Bulls buying the low here. They have to either buy more or they sell out. In this case, they bought more. But if they were to sell out, bulls are adding to the selling pressure because the closing a position isn't just closing a position. You can only buy or sell the market at any given time. Close is just the words we see, but what's going on, the market function behind the close button is selling. So anyways, this ends up being just a pullback, testing the high here, and then it rallies. Get a rally. This is the nicest part of the rally. Bar 35, closing on its high. Creates a gap. It's a weak gap because it starts with a bear bar. Bad breakout bars get tested, and bar 34 is a bad breakout bar. And you can see it gets tested, very deep pullback, but the low of 34 is intact. What's damaging is the low of 35 is not intact. Bulls with a stop 1 tick here would get stopped out. I would be one of those bulls. That's generally where my stop goes. Bar 38, big bull bar closing on its high, bad fall 339, and then we get 2 bull bars in a row. Small bull bars, both bull bars closing on their high, so that's good for that behavior. Then we see a trend line break, bar 42. So there's a small 3 legs going on, leg 1, pull back, leg 2, pull back, leg 3. Leg 3 becomes climactic. However, this breakout here with the leg 3 is good. It's trapping bears. Three gaps, so strong to get its own 2 legs, and it does. So although this is the third leg, this third leg has enough momentum for leg 1, pull back, leg 2, pull back, leg 3. I mentioned second leg traps here. Here's another second leg trap, leg 1, pull back, leg 2. Testing the breakout point, bar 51. Let me draw these gaps, and I kind of blew through that. I do like to keep these videos around 20 minutes. I think that's just a healthy time for everyone. Sometimes I spill over. It's important. 3 gaps here. I talk about how the last gap, if it's bigger than the starting gaps or same size, could be climactic price action. Same size, a little bit smaller, bigger. This gap is about the same size of these 2 bars. So that lets us know that 46 is also a big bar. It's in its third leg. I'm going to delete these from a fractal perspective. So what's the fractal leg count? There's a trend line break here, but I'm going to count the small bar. Well, leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. Bar 48 is that third leg. Two compression bars can signify the pullbacks. So leg 1, pull back, leg 2, pull back, leg 3. No gap here. This was the biggest gap. Exhaustion coming soon. Then we see a 15-minute pullback. Bar 49 pulls back. Bar 49 is closing on slow. That makes bar 50 a pullback to the pullback. So if this is the leg, this is the pullback, this is the second leg. This is now the pullback. This is the start of the pullback from the high 48 down here. This gets a pullback, bar 50, and sells off. So bar 50 is a pullback to a pullback. It sounds confusing, but just take some time, look at the charts, and process what I'm saying, and then come up with it in your own words. That's the most important thing, is understanding it and understanding the markets from your perspective. If you like my perspective, I'm glad, and I'm always glad to see you guys come back. You guys tell me, hey, I like your videos, and I really appreciate everyone. Thank you. Bar 51, bad bar, closing above its high, good for the bulls, bad for the bears. Leg 1, pull back, leg 2. 51 is testing the breakout point here. That's a rally. That starts a rally. 52, 53. 53 is a bad bar, not closing on its high, closing around its midpoint. Then we get another pullback, deep pullback, 54, and that starts to leg 3. Leg 1, pull back, leg 2, pull back, leg 3. 57 breaks the trend line, and then we even see an attempt at a fourth leg, 58. Instead, 57 is a version of a high one. You could argue that the high one's here and here. So pull back. So rally, pull back, rally, pull back. Right around here is a high one on a lower time frame, and a high one in the third leg in a trading range gets faded, and you can see that this was the third leg for multiple reasons. Leg 1, pull back. Leg 2, pull back. Leg 3, high one, sells off. But more zoomed in. Leg 1, pull back. Leg 2, pull back. Leg 3, high one, zooms off. So there's a nested wedge right here. Bulls tried 3 times in one direction, and they failed. Market's going sideways to down, which I think more people were expecting a sell-off today than a rally. I know I was. Bar 57 has a lot of buying pressure below it. Bulls that buy against here, above here, gets their orders and then traps them, closing, bear bar closing on slow 58. 58 sells off. So leg 1, pull back, leg 2, pull back, leg 3. It's a hard count. It's the trading range behavior. I would like to count it leg 1, pull back, leg 2, hidden leg, 59, 60. Bulls are trying to buy this. You can see that bulls are getting filled on these tails, but for the most part, they're underwater. So bulls that bought here had a small moment to be in profits. Nonetheless, they get out at break even, or they're sitting underwater. 3. My dog just snuck into my room, but he's sleeping for once. He's mad because I haven't walked him today. Bar 63, small bull bar, more tail. Again, we're coming into that overlap. There's really only one. This was the easiest part of the day, and it was, by the time it happened, it was too late. It was too late to trade. What do I mean by that? That sounds funny. Like over here, it's kind of hard. You can say this is the first gap. First gaps get faded, strong, but this is breakout. I can see the argument for getting short. And here it's kind of clear, like, oh, I should have got long, but now it's over, and now it's time to get short. I remember that when I was in the trading room, sometimes the presenters would say, you know, in trading ranges, by the time it's time to get long, it's too late. By the time it's time to get short, it's too late. And that sticks with me. I don't trade around it, but I do think about that when I'm doing the breakdowns. By the time it's obviously long, it's short. By the time it's obviously short, well, the market's closed. 66, bear bar closing on slow. 67, bear bar closing on slow. 68, bull bar closing on high. 2-bar reversal with fall through 69. There's a quick scalp. If you didn't scalp out, you'd be underwater. You could buy more lower 72, rally, get out, break even. So bulls that buy the high of 68, they don't get out on 69. They buy the high here. This first line signifies their entry. Sells off, they buy more here, and they get out at their original entry. Look at the double top, 75. Leg 1, pull back, leg 2, pull back, leg 3, 78, pull back. 78 is the pullback. This is actually a good idea. This is a good example of double tops because it kind of looks hidden. You can't really see the double top because it's 69 and the high of 70. But when I show you that, what did I do? The entry's right around here. So bulls buy here. Ignore the 50%. Bulls buy here. Market sells off to 72. Look at the rally. Three legs down. Leg 1, pull back, leg 2, pull back, leg 3. Bulls are going to buy more here. This is also about 1R of bar 68. So that's usually where bulls will start to scale in, is 1R where they're trapped. So they buy here, buy here. This middle line becomes their average price. Rallies, they make money. They get out at their original entry, so they make money on their second contract. Bulls sell out of longs at the same time. Bears are shorting the second leg, and that causes the leg 2. That's the dynamic for leg 2s. Bears will front run this. They add more to their winning position here. Trap bulls get out at break even. They sell out of longs. So bears that front run are selling. Trap bulls are selling. And then the traders who are looking for a second leg are selling, which is us. And we get that second leg down. So yeah, that'll be today, guys. We're off on Monday, so stay tuned for a members video. It's going to be about breakouts. And I'm going to be coding for the rest of the night. I really like it. I'm getting pretty close to something tradable. I'm looking for a very consistent way to enter second legs. And I've been playing, and I'm getting there. Here's the targets, you know. This TradingView only does these accounts at 100,000, which is annoying. So these numbers will be a little bit different. But the idea is the ratio will be the same, and that's the most important thing. And there's a lot of trades, 1,000 trades. So this is also without a leg count filter. So that's what I think is very important, is I'm not filtering leg counts here. So there's room for human error. Yeah, there's fun stuff. I'm taking my trading to a different direction I didn't think about. And I definitely want to share that with you guys over time. I'll give you guys updates here and there. It took me about a week to come up with this. I've done like over 50 iterations already. The first one was bad. It was like the exact opposite. It was like all red and a little bit of green. So we're working towards it. If you guys have any questions on how I'm getting this done, please don't hesitate to ask me in the comments or the Discord. You guys have a good one. If you learned something, share a show. Don't be a hoe. Be safe today. It's Memorial Day weekend. That doesn't mean drink and drive. That means hang out and remember what this weekend's for. And you guys have a good one. I'll talk to you guys later. And you share the show. Don't be a hoe. Bye.